Hey guys, it's BlockchainBrad, and today a very special interview with two gentlemen from Nash. We have Fabio Kennison and Ethan Fast here to talk all about all the updates with regard to Nash and what they've been doing of late. Gentlemen, thank you very much, especially to you, Fabio. It's very late where you are.
Thanks so much, Brad. Good to be here.
Thank you, Brad. Yeah.
You're super welcome, guys. Now, many people know about Nash. You have a great reputation, but let's pull it back to the beginnings to really understand what you stand for and what you represent. You argue that it's all about distribution of finance, changing the game with regard to blockchain. So would either of you like to just quickly rehash and recap a bit of what Nash stands for?
I think that both me and Ethan have a different vision, so I would like both of us to reply this. For me, the most interesting thing in Nash is the aspect of community. So we came from open source group or from open source developers, and we met as open source developers building distributed finance. And we come to a point where we needed a solution, a service. So that was actually in the moment we met each other. But the basic idea was, it's a moment that the technology is solid to a point that we can actually build a service that can distribute this technology to people and allow them to use it as finance. And then how do we bring the benefit of this to the actual community building and using it is what makes me really bullish on Nash. So it's like really motivational for me, is the distribution mechanism. It's really the economics of it, how we make our community profit from it and the users to profit from it. So that's for me is distributing finance to everyone. And I think it's for Ethan, it touches more a personal level of his expertise on user experience and so on. So maybe he can talk about that.
Sure. What do you think, Ethan, I mean, with regard to the premise for Nash and what it stands for?
I agree with Fabio. I mean, I think one thing that's really exciting about Nash, we all believe at the company, right, in the future of digital assets and sort of how they're going to underpin, some much broader financial ecosystem. And there's just today, if you think about like all the problems that need to be solved before we can get to that point, despite like the huge promise of this technology, there's so much opportunity, right? Like people have not stepped back to the degree that they should and thought about how do we take all the benefits of these technologies and embed them in applications that are usable, right, to real people. And, given that this basically hasn't happened yet, but also given the power of all this technology, it's a huge opportunity for us as a company to sort of get out there and, build out this sort of infrastructure and these applications, which again, normal people can use, anyone can use, but give you this benefit. And just to be more specific, right, like what is this benefit I'm talking about? We kind of assume, like probably most people listening to this are familiar with cryptocurrencies and the cryptography that underlies them and so on. But the core benefit, right, is this idea of user control of the assets, right? The fact that, for these assets that you have, you're not delegating your trust to a third party, that you can control these assets, move them around how you like. And, for us, again, as an exchange, I think one of the bigger problems we're tackling in this space at the moment is security, right? So if you think about exchanges today, right, they sort of fundamentally violate the premise of cryptocurrencies, right? People go to centralized exchanges, just exchanges that take custody of your assets to trade these assets, when, the whole point of these assets in the first place, right, is to, have control and to sort of own this. And then you give this control away, and then, lo and behold, people hack the exchange owners are not responsible, etc. And you end up in all these bad situations. So that's just a very specific example of the kind of problem that we're solving.
And I think sorry, go ahead.
So I love Ethan's comment, because if you think about Satoshi 2008 paper, he was solving the problem of double spending in electronic cash system. And the way he solved it was using a decentralized network. So the self-custody, the decentralized network, was how he solved the problem he was thinking of, which was an implementation of an electronic cash system that didn't have the double spending problem without a centralized component. So it's very interesting cycling back from
Yep.
all these problems and getting
Right.
to the like
Right.
It's like we built the decentralized network, then we built the centralized applications on top of the decentralized network, and now we're decentralizing the application.
Right.
Yeah.
And obviously decentralization inherent in that is also part of the distribution as well. And what you're saying as well, Ethan, is that clearly the means in which we can have that autonomy, we can circumvent the problem of third party is fundamental to the revolution that is the cryptographic premise, that is the ability for us to transform socioeconomic outcomes and even monetary policy. But I did want to ask you both about digital assets themselves. We hear that term thrown around a lot. Asset has its own terminological value, we know today. So what does it actually mean, to have a digital asset today when it comes to crypto?
Well, if you wanted me to answer to how I'm using the term, right? So when I say digital asset, this is encompassing cryptocurrencies today. And some of these, supposedly are currencies. Some of them are very much not currencies. Some of them say they're utilities. Some of them say they're securities, right? So there's a huge range of things. Mm-hmm. I think what these things have in common is they're valuable, right? And people, care about that value. And they're digital, I think, and maybe Fabio has a different opinion on this, but they're digital in the sense that you have this sort of more concrete mathematical control over these assets and how they operate on public networks, right? So even though like in your bank on Wells Fargo or Discover, technically speaking, that asset is digital, it's like a number in a database somewhere, you don't have a set of public APIs you can use to move that around, right? So when we're talking about digital, we're talking about sort of more capabilities put onto these sort of quote unquote
right.
truly digital.
So it's a new digital form, really. It's a new digital asset that's blockchain based. What about you, Fab? What do you think about this term?
Digital assets for me, it's more or less in the same line of Ethan. It's every digital entity that holds value. So both registered and unregistered securities, cryptocurrencies, and that's we call assets because they all carry value somehow. And digital, I think, for me, is really the source of trust and the source of scarcity is how I see why they are digital. So cryptocurrencies have this one-to-one relationship with a cryptographic proof. Mm-hmm. So that's the source of scarcity, and that's the source of trust. You are trusting the cryptography there. So that's for me how I classify digital, because when you think about the central bank issued database currency, the way you are trusting is the board of the central bank, and the source of scarcity is a social contract. Is not digital, right? It's off the chain, let's say.
Right.
So that's how we define digital.
So I guess, because you are a gentleman and exchange by design, obviously understanding, for those who are trying to understand the movement, it's also imperative to understand the value of the assets that you would indeed support as well, and why they can potentially transform the current narrative when it comes to money, when it comes to finance, and when it comes to assets, all the way to Wall Street. Now, some of the things that you're doing are very clear with regard to your plan. It's all about trade, pay, and invest as three buzzwords. Do you want to talk to us a bit more about what that actually means, though, with regard to what you do?
Right. So you said we are exchange. Actually, Nash is a fintech company.
Okay.
And the first product is the main product is an exchange. So that's a little bit of the confusion. So when you think about what you do with assets in general, assets, currencies are not. What you do is you use them to invest, use them to trade, and use them to pay. Okay, so that's what you do with with assets in general. And what we are thinking is, on the realm of digital assets, how do we enable people to trade, pay, and invest on those assets in a way to keep the properties of these assets? And then it links back to what Ethan was saying.
Right. So you're a robust financial platform with many different aspects to it. With regard to, let's talk about your exchange as one of them, as one of the core key services and products that you offer. How do you ensure that people can trust the exchange component can trust the value, the inherent value and the long-term value of the assets that are also on board on the exchange?
Well, I think those are two different questions, right? So one question is, if I'm understanding it correctly, how do people trust in the way that assets are being traded on the exchange? Is that right?
Well, not so much the trading, but actually trust that there is inherent value in the assets that are onboarded. I mean, because we're in a very speculative environment right now with crypto, how can we trust that these are indeed actual assets, you know, that are backed by something and not just speculative instruments of nothing?
Right. Well, I would say, go ahead, Fabio, if you want to answer this.
No, I would just say that actually an exchange is an information distribution system. So what we will do is we try to guarantee that the legal side of the project is in check, and that's why we have all this compliance system. If you enter in Nash.io and list your token, you're going to see the questions we make. But exchange itself, Brad, is a way to trade information, and the way you exchange information with other people in an exchange is through price signals. So actually, a liquid, well-balanced and performing market is a strong signal that there's real value behind an asset.
Right. Well, the reason I asked, though, is that there's already been evidence of delistings, you know, for reasons of performance, for reasons of, you know, questionable value. That's really happening, Fabio. So there's evidence already that some of the inherent problem with crypto is some of the projects aren't real.
I can add on to that a little bit, right? So what Fabio was saying, right, like we require a legal opinion provided by any of the projects we list on the exchange, which is largely, you know, to help us ensure that we're not listing unregistered securities, right? We don't want to deal with projects that are engaging in that sort of problematic behavior.
Right.
I would also say, although we don't have this out in a formalized way, that one thing we care about broadly in the platform, because we care about user experience broadly, is not exposing users to projects that are, you know, obvious scams or have obvious problematic behavior. And this is something that, you know, I don't know how much we really want to talk about this today, but I would say that, you know, we do care about this as a company, and it's something we're thinking about when we list projects. That said, like what Fabio was saying, right? Like, how do you get value, right? The exchange is sort of what tells you what the value is, right? So there's a difference between a token that we list on the exchange that a lot of people want to list and trade that maybe goes down in value, and a project where the founders are scamming and, you know, they just did this ICO to make money through fraud and then wanted to list. Right? Those are two different things. One is maybe a hypothesis about an asset that just didn't turn out to be true among the founders, that didn't have a value or whatever. And the other is like obvious fraud. And I think as a company, we definitely care about basically not supporting bad actors in this space.
Right. So gentlemen, how do you go through the process of assessment? You know, obviously we aren't privy to much of the information in the processes, but when you're trying to assess value, when we assess a digital asset, what do you do internally as a team?
We don't assess value, Brad. We assess the legalities and the soundness of the token economics in terms of the security settings, as I was saying. Mm-hmm. The value is why we open markets, so that people can send information and tell what the value is. We as an exchange, and maybe here is what we're gonna be different from anybody else that you are maybe thinking when you are making these questions, is we as an exchange, we want to grow as digital assets grow. So if stocks, if we have Apple in digital assets, we want to be able to trade those. So for that, we will comply with quite a lot of the regulations of health markets. So we will not allow wash trading. We will not allow all these manipulations of markets that can be done on the exchange, so that actually the signals you get from the market are true. So right. we did not define the value. What we do is we try to set up a performant true market that whatever value is there is actually the value of the market, is not being manipulated.
It makes a lot of sense. Now, I want to ask you both about securities, because obviously you're a leading security in this space. You are arguably the first to ever really emerge as such. Now, with regard to future onboarded projects, is that the sort of tact you're taking in also replicating the same sort of respect for securities as something where people can get dividends, as something where you support a more regulated environment where there's evidence that this is a genuine startup, this is genuinely something that has security value?
I mean, I would say that in general, we'd be very excited to see more companies in the space following the model that we went through, right? We put a lot of pain and effort into kind of going through that process. And so far, we actually haven't seen too many others do the same. So it's a little interesting that hasn't been the case. I do think that we see more sort of traditional securities moving into the space as digital assets. As you know, I mean, we've talked before about our plans to ultimately engage in the trading of those assets after we've accomplished certain things. But yeah, I mean, I don't know if that answers your question.
Yeah, Brad, I think that what we did that was, and ties back to what I said, what makes me really excited about Nash is we did a public offering. So even though it was some other people did digital securities, they did not do the public offering.
Right.
So we allowed anyone, not anyone because you have KYC, AML situations, but in general, we allowed a lot of people to have the opportunity to participate on the project. And that's really what I would like to see more. We would have problems listing because we cannot list securities right now. It's a long process to do the legalities and operations of it. But it will be really helpful for the industry to see more of that.
Right, so it's something of the future. Now, gentlemen, something really exciting that's happened for Nash of today, I think, or very recently, is this work you've done between Neo and Ethereum, essentially with a cross-chain trading facility. Do you want to talk a bit more about what it means to have this cross-collaboration, this transition that you've made?
Yeah, so you're phrasing it as a collaboration. I would say it's more a desired trading behavior, right? So we're an exchange. We want to support multiple blockchains in the future, many more beyond just Neo and Ethereum. And Ethereum and Bitcoin have plenty of volume, and they're very valuable to us as markets. And so that's the main. I mean, that's our goal as an exchange, right? To support all of these things. Are you interested in hearing more about sort of the technical way in which we?
Especially considering that you're expanding, I think that's the main point. Is initially when we spoke last, the focus was on Neo. There's a lot of discussion about how you're engaging in, less platforms rather than more. The agenda now has changed, and you're really emerging as something that can be utilized on a multitude of platforms.
I would say that our agenda has always been a multi-chain agenda. Yeah, and it's unfortunate, but the people who talk about us in the space have long associated us with Neo, which is fine. I mean, we came from Neo. That's our open source background. But from the very beginning, we've been focused on supporting Ethereum and even Bitcoin.
Okay, well, that's a good clarification. I think perhaps
it's really important that we are doing the cross-chain and so on without introducing another chain, another token, another utility that needs to be used somehow in the system to make it work. So I think for me, it's really exciting that we are introducing this technology where we do cross-chain trading without other chains.
So given that this is happening now, what do you think it means for Nash for other potential cross-chain trading scenarios? Are you already in discussion with perhaps others? Is this really the benchmark for more?
Well, Bitcoin is the huge thing, right? Bitcoin has just dramatically more volume than Ethereum or Neo, right? And this is, go to any exchange, that's where most of the trading happens. Bitcoin is also very interesting and exciting from a intellectual standpoint as well, in the sense that it doesn't have the sort of powerful smart contracts that you have on Neo, Ethereum, and many other chains. And so how you actually take a system like Bitcoin and make that and make a system for non-custodial exchange with other chains is quite a challenging problem. And it's a problem that we made a lot of progress on. I think recently we announced that we finalized the protocol spec for how we're going to do that. And that's going to be one of our two big pushes after launch is actually to get that set up as soon as possible.
Right, and then given that you mentioned that the significant difference in volume, what could that mean for Nash, Ethan, if you can indeed, create this cross-chain scenario, this trading situation where BTC is integrated? Surely that's going to be a big thing for Nash.
Yeah, I would say like.
No, I just we will integrate. It's just a matter of time. It's not like it will not. It's like it will be there. It's a matter of time. And I think what Ethan was saying is like it's really important is supply in the market, but it's not where we stop either. It's like there was a lot of effort that the smart contract part, and maybe Ethan can talk better about it, is small and well defined, use few features, so that it can be ported for a lot of chains. So there's a lot of complexity in our backend on our off-chain system, but there's not too much complexity on chain, so that we can support a lot of blockchains. Really.
Right. So essentially, you're agnostic. Your core technology is really something that can be utilized on any sound blockchain system.
Yes.
Yeah, I mean, because blockchains are based on derivations of Bitcoin, right? So they at least have the power of Bitcoin scripts, or they have the power of Ethereum VM, sort of, smart contract languages, and we support both of those. So, theoretically, any blockchain based on either of those things we can support.
Right. Okay. Well, that's there's a significant number of blockchains that emerge from that. Now, with regard to
Brad, when you think about the future, and I'm thinking here 3 to 5 years in the future, if we have like national digital currencies, if we have real big Fortune 500 stocks, digital stocks, the most likely candidates technologies for that will be blockchain, public key cryptography. And we are trying to make our system ready so that we could support those technologies. So we really want to be a place where people can hold their assets and trade and pay, right? So when you think about trading these assets, we need to make the technology in such a way that if Australia decides to launch the digital dollar, then we could integrate with the Australian blockchain and allow people to trade between the cryptocurrencies and the Australian dollar.
Right.
So
it's a really good point you raise, I think, as well, Fabio, because we're already seeing discussions, we're seeing media release information to suggest that countries like China, for example, are considering a digital currency, that is more globally transactable in this sense. It utilizes some of the mechanisms we're talking about. Do you think that this is likely to emerge as, a commonplace approach from the top down in the future, whereby governments start to use the benefits of blockchain and thereby, potentially utilize the platform that you offer as an agnostic solution, as something that can potentially onboard these sovereign currencies?
Brad, nobody's using salt as currency anymore, right?
Right.
But they used to.
They did.
So they changed the technology for the currency. So they would change the technology for the currency again. And after blockchain, there will be another thing also. But the next step is digital currencies. So I think that's a very natural progression. I really cannot see how that will not happen. I don't know if Ethan has an hypothesis for that, but
yeah, I just agree with you. I'm not sure I can add much other than there's a lot. So even if you take away the decentralization, which a lot of people care about, but let's say you're a government and you take that away, there's still some very interesting and powerful trust properties that you can give to users of the digital asset, even if you're running all the nodes. So there are so many reasons that these sorts of things are going to be adopted, regardless of the specific way in which they're adopted.
And Ethan, in that sense, because obviously you're a proponent of decentralization, as we spoke about, but if, for example, a centralized party such as a government or even enterprise themselves, if they showed an interest in Nash, for what you can do, is it something that you're open to as a team in working with these sectors and working with these centralized entities to support them if they so want to utilize an exchange such as yours?
I would say we're already doing that. So USDC, right? That's a stable coin. This is basically created by an entity. It follows legal, it's under legal jurisdiction for how it's managing the assets under its control and how it issues the tokens it does. But fundamentally, that's a centralized system. Like they have ability to go in and they can even blacklist an address, right? Potentially, right? So I guess the simple answer is we're sort of already doing it.
Well, that's good to know.
In general, every stable coin is like that. Not only USDC, USDT, also every stable coin. So one thing is like we are a fintech company that allows people to do that. We should not put ourselves on judging the value of we will close to this country. Unless we are infringing some AML rule, which we will never do, but we will not. Would say, okay, the digital Australian dollar is fine. You can trade it. And the thing is, the way they derive value will be different. So we believe in decentralization. Yes, we do. But the way the Australian dollar derives value is different from how Bitcoin gets to have values, and people see different needs for both. So we should support them.
Right. Again, you're taking the very impartial approach to this as well, to replicate or to resonate with the agnostic technology that you represent. So you really clearly have an agenda to support the potential of this system. Now, with regard to key innovations, Ethan, I wanted to ask you if we could, just discuss some of the clear technological developments since we last spoke. What would they be with regard to, significant developments, perhaps, with your matching engine or beyond that?
Yeah, I would say since we last spoke, the biggest shift that we made internally as a company was to innovate and iterate on the non-custodial protocol that we had been thinking about. And we came up with an approach that was quite efficient to remain non-custodial between chains and within chains in terms of the assets. So I can go into the detail a little bit about that, but that key innovation, figuring out how to be 100% non-custodial, but at the same time giving people the performance and the user experience they want, that's the huge thing that we really solved in between our last conversation.
Right.
Prior to that,
I want to just jump in and ask why that's important. Why having that non-custodial approach is of significant value when we hear about custody in so many other circumstances and discussions.
Yeah. I mean, so the biggest reason I always bring up is security, right? So if you look at what happens to people when they hold money on centralized exchanges, there have been a few that are trustworthy and that haven't been hacked so far, but many exchanges have been hacked or have had sort of bad leadership, sort of bad people running the exchange, and then you end up with all these user stories about issues, right? Like people's funds not being available, people's funds being lost. And there have been totally insane stories about all this stuff, right? And if you're running a non-custodial exchange, this is something that simply cannot happen, right? It's just off the table as something that can happen. And so the security is huge, right? I think the second thing that a lot of people care about is just sort of, following more from a kind of principled or ideological point of view, the whole point of these digital assets in the first place, right? Like there's a substantial subset of the people using cryptocurrencies today who care, deeply about the fact that they are, decentralized, that they hold the keys, that own the assets and can move them around, et cetera. And you have yet to have a good exchange experience for those people that actually sort of fits within those properties. So those would be the two big things.
Right. And with regard to, sorry, go ahead, Fabio.
Another benefit, which is maybe a little bit outside this, is we are trying to be this neutral platform that allows people to trade and have their assets managed by. So we need to be as neutral as possible. So when you do an investment and when you do a trade, you are sure that that's done and yours. Okay. So the way we provide that to the global audience and being non-custodial is really powerful, because now we remove the need for you to trust us to honor these trades and honor these investments.
Right.
So we are removing a component here. You don't need to trust the platform to honor that, and that's important.
And the fact that you can do that is an asset in itself, because there's so few who are doing this well. So Ethan, I wanted to ask you, given your technological knowledge of this particular aspect of Nash, do you think that you're doing this the best so far from what you've seen of all of the different startups that are trying to address this non-custodial issue?
Yes, I mean, it's sort of, if we thought there was a better approach out there, right, we would probably be copying that and using that. I can elaborate a little bit in that I think that the way we think about this as a company, again, is driven so much more by kind of practical value and user experience. And so when you look at like the various ways that you could do something like a non-custodial exchange, there's a huge design space of possibilities, right? And any kind of protocol you develop is going to have certain positive aspects and then certain negative aspects, and it's always a trade-off about okay, do I take the performance hit of like multiple back and forth communications on this particular thing so that I can get just a tiny bit more trust and like have it get this extra trust property, right? And I think we as a company chose I think the best place on that design space, in the sense that we developed an efficient protocol that works cross-chain, that's relatively straightforward to implement, that gives people the core non-custodial property. And it's just something that may not have occurred to other people in the space, because they get caught up in these formalisms and end up going down these rabbit holes of sort of like pure DEX kind of non-custodial chains of events. And you end up in a place where, basically, you're doing so much computation and adding so much complexity for relatively small amounts of additional trust. So I think we just chose a much better place on that.
Right. And with regard to the, sorry, go ahead, Fabio.
No, this is before this talk we were having this conversation, right? One thing that I really liked when we started is that we defined the security properties we want to give. So these are the problems we are solving, like to have this level of security, these settings, and then the protocols came and are we doing that? Are we not? Can we relax this or not? In such a way that then we come to this design position that Ethan was saying. So when we changed the protocol, when we decided to do changes, was with a motivation like that. We were looking. We know we have this requirement here that we are not meeting. Can we do something to meet it? So if we were being like a scientist mindset, we would say, "Oh no, let's not do that and do this like this." You understand? Because the math checks. But then we would look at it and say, "No, so let's try to meet that requirement."
Right. Okay. Now, with regard to the open source nature of many of the different the code of many different startups, how much of your technology is actually that? And are you actually keeping some of that more as a secret source, more as something that is closed?
Well, once we open up the APIs, people are going to fundamentally see how the protocol works, right? This is something we haven't actually gone out and published a white paper about, like, here's specifically how our cross-chain protocol works, here's specifically how our non-custodial protocol works. People who read the original white paper, that stuff was not in that white paper. I think, we'll discuss as a company, it's probably not something we can say in this call, like how much details about specifically implementation and following the protocol we're going to release at a high level. But, at a very basic level, you can take a look at the open source code, figure out what it's doing, look at it, notice how it is non-custodial, and evaluate it for yourself. Right.
Okay. Well, it's really exciting to hear the kind of developments you've made in that area, because it's not easy to do. How important is it to have the team that you have, Fabio and Ethan? You have one that is second to none in the space. You need a really strong group of people who understand cryptography, who understand blockchain, understand even beyond that when it comes to coding. how is the team building?
I think that's the most important thing, is the people. And the second most important thing is the process, is the culture inside the company. So it's interesting that you have me and Ethan in the call, because Ethan is really dedicated lately to get the best people, and I am really dedicated to get the best culture. So I think it's why we work most of the time every day. And it's fundamental, Brad. Is without the people doesn't happen, and even with the people, without the culture, it doesn't happen either.
Right.
So it's I don't know if I can say much more. Maybe Ethan can have some.
Well, Ethan, what sets you apart? Because often we've talked about this, is the academic side is really strong in Nash, but clearly there's just a very strong understanding of what you're building. The knowledge base is immense. So do you think that, you know, the success really hinges on the quality of your team?
I absolutely do. I mean, I agree with you. It's like literally the most important thing about the company is the team. Yeah, I mean, adding on to what Fabio said, you know, in general, it's not just academics. Like we have, you know, people who are strong from an academic sense in the company, but actually maybe more important is just, you know, problem solving and engineering, and people who are proactive and able to, you know, do all of this crazy work that needs to be done, building out something that is like, you know, again, literally never existed before.
Right.
So we could not have done, you know, any of this without the team.
Yeah, I think you raised a good point.
I can talk about, like, we have 3 other founders. We have Fabian, Luciano, and Tom. And maybe the most academic ones would be Ethan, Fabian, and me on this order. And who is actually building a lot is Luciano and Tom. They are going like crazy building stuff. So the engineering part is really strong also.
Yes, I didn't mean to, you know, say academic only. So I really understand. It's about the pragmatics of the application.
One thing that you said that I would like to chime in is, you said, how do you have all these things? I think one thing that's really important, and people make a bad case about it, but we are really strong about it, is our team is quite diverse, of different backgrounds, of different cultures, of different everything. And that allows us to have this, like, so broad reach of knowledge that I'm amazed about the people we get in the company and the challenges that they take on. And I think diversity is really important. And I'm talking here, like, I am a mechanical engineer from Brazil, and I'm working with Ethan, which is a computer science guy from the US. And that different mentality, in many ways, we had long discussions that we disagree in something, but we had a fundamental agreement that was a lot more important, and that made things much better. So I think this diversity is important also.
Sure. And, you know, I think in all circumstances, whether it be Google, whether it be some other boardroom, the fact is, whenever there's collaboration with brilliant thinkers and doers, which is what you're alluding to, is the doing is fundamental. That's when real innovation can you know, emerge. And that's what you're showcasing here now with the technology building, and now with Nash really showing more different new and exciting aspects of products and services that are coming forth. But gentlemen, I wanted to ask you about the means in which you can do all of this, with regard to income, or with regard to money, with regard to whether or not you have significant runway since you did the raise. How's everything going to sustain all of this work? How are you sustaining all of the people that are currently working as a team to build this? Are you reliant solely on the money that you did raise from the beginning?
Brad, so I will be fully honest with you. For a lot of months was us, the founders, who founded the company. And with the support of Hongfei as an angel investor, so we are very happy for his involvement. But we raised it in cash from our VC partners, and I would say mostly that's what we have been spending. The public raise we converted to cash also, but we converted some part to crypto, And I think we are even going to use some of these assets on the exchange, like to bootstrap the smart contracts and so on.
Mm-hmm.
So just in cash, we have enough for a couple of years at least. And then we have our crypto assets still. So we are not looking to raise more capital right now. What we're looking at is on this Friday, to bring our product and to demonstrate to the market that you can have a user experience that's really close to centralized systems while being non-custodial and be really fast while doing like cross-chain trading.
Got it. And I think, thank you for being so transparent about the fact you do have runway, because obviously, guys, we want to see you succeed, but you have to have a way to continue having people like Ethan and all the other team members on board because they've got to eat. But with regard...
Sorry, the founders would be on board always, but it's a little bit less. You can't not pay your employees, right?
Exactly, and it's good to know that you can, because quite simply, many startups didn't set that up for a longitudinal, viability and possibilities. So with regard to the future of this, it's really exciting to know that you do have that runway. Now, I wanted to talk to you about some other specific things that you've built into your modeling. Now, one of them is with regard to your Nash Mobile. That's something that's come up as well as in terms of a product. How important is it to have a really good, useful wallet?
It's fundamental. When you think about the trade, pay, invest, or pay, trade, invest, the wallet and the mobile is really central to the pay.
Mm-hmm.
Okay, so it's I would say it's 1/3 of the company is on the mobile side. So I think we have another big challenge there on user experience and how we bring that, and exciting. I really like the social features that we are going after there, which makes completely different from the other exchanges, let's say.
Mm-hmm.
But as to reply your question, it's fundamental. I think it's fundamental to have the mobile wallet. In the beginning, we looked for even partnering with other mobile wallets, but at the end, to guarantee the user experience that we want to bring, we would need to do our own, and then we decide to grow.
Right. Well, clearly,
just to add to that,
please do.
Point that Fabio has raised in the past, which is if you think about sort of what piece of this financial architecture is the most sticky, it's actually mobile, right? Like, on a day-to-day basis, you pay for so many things, right? Whether it's on a website or in a store, or, between friends. And, that sort of level of engagement with the platform is very, very powerful, especially if you can tie it into other aspects like the exchange aspect.
Mm-hmm. Well, with regard to some of the other products that you've also developed, there's quite a few, and obviously for time we don't have, we can't go through everything, but you also have Nash Pay, you have the Nash extension. I mean, you guys have been doing a lot to develop the platform itself. Do you want to talk about the things that really matter to you to let people know just how robust as you said, it's a financial platform and system, and how robust it's becoming?
I think that what we want is see how people, and especially your community, uses the product in the next months. And we can make a promise that we will listen and interview them and get feedback. And really, our goal is to have the best user experience and the best customer support.
Right.
Bring the best service to the user.
So all these things are coming. There's a lot coming for Nash in terms of new products or services.
Yes. But we will go focus. So we will first bring this MVP, which is already central on the exchange. And when that is in a stage that we are really happy, the mobile will come. And I'm not saying it's going to take years. It's like a few months on focus. Then the mobile will come, and then we'll refine that, and then we'll integrate with the extension. And I think this is the only 3 products we have planned right now. Right. But and then after we will also go and work on them as unison. I think that it's really core to service the user here, and what we want from the community is then to use and give us feedback. And whoever is on our community, anyone who has 1x can join on community.national.io. we will have see these feedback threads, and we will continue to do that until we achieve perfection. And I don't think we will ever achieve perfection.
Right.
So it's we have been saying Nash will be ready when it's ready, and we will release when it's ready. So yes, it is ready, but will never be done.
I like that you're such a perfectionist as well, Fabio. I mean, it's really clear. The whole team really is about releasing things when they're properly ready, which is, again, something that's quite atypical to the current climate we see in crypto. Many of them are releasing prematurely. So, you again are reaffirming that you are about quality and readiness first. Now, both of you would...
It's a difficult call to make, Brad, because you need customer feedback to make something like really good. So you can only do so much inside your house, and I think we have done a good job inside our house. But now we actually need more feedback from from people actually putting money and moving money around on it, so that they have a different vision of the product. And I think we are on the point that we need that feedback.
Right. Now, with regard to supporters, or partners, I recently read a tweet that there's banking partners also involved in, the new developments you're making with regard to acceptance of national currencies. That's a big move. So do you want to tell us a bit more about what that actually means to have, growth in that collaboration, in the potential of banking in conjunction with your overarching financial platform?
Right. So what we did there is not exactly for the trade product of the company. So it will not be coming live on this August. Most of the focus on the banking relationships is for the payment side. It's for the payment products, because you have this thing that there is a difference on what merchants want to accept and what users want to pay with. So we need to support the case where the merchants just want to receive normal cash, like dollars or euros, right? And then they want to receive euros, and the user wants to pay in Bitcoin. So we need to have a way to transform that Bitcoin in euro and send the amount to the merchant in such a way that it's seamless. And that's why this network is important. But that's much more focused on the payment side. And it's a work that unfortunately I would say it would take a bit of time to see the light in general, but it's really exciting to be talking to the people we talk. We are a small startup. We didn't raise millions and millions of dollars. Like I was just saying, there was a raise for $150 million to the exchange this day. That's crazy. But even though being a small startup, the level of care that we brought allowed us to talk to like these big players, and that's really exciting.
It really is. I mean, do you want to give us some sort of hints of, when you say big players, who are these big players and who are to come? I mean, obviously, gentlemen, I'm not here to FOMO. It's not my intention, but it's just to give us an understanding of the kind of people you are actually talking to really evidence the legitimacy of what you're doing.
Okay, so Brad, I would say like this: it's more important the service that they provide than the size that they are. So I also want to partner with small but competent and that provide a nice service, and I don't want to downplay anyone because of they are smaller or not.
I'm not sure how the crypto community would feel about that. They always love to hear those big names, but I really respect it, Fabio, because it is about just trying to make sure you're partnering with real parties.
I talk about these. I talked about this like 2 years ago when we did the first talk about this thing, about these ideas, right?
Right.
And I said, startups change, things change, and when you announce a partnership, it may change in the future and never realize. So you are sending a wrong signal about something that's going to happen that may not happen because it's just a startup. And I think it's still the case. It's becoming less and less the case. So with time, we will see more and more who are our partners. But I would not like to disclose anything related to.
I totally respect that. I totally respect it. Now, gentlemen, I wanted to talk to you about your token. Now, it's always a very questionable, contentious topic for many, because many, many members of the team don't like to talk about price. But the reason why I do want to is because you're a security. You're not that utility token model. It's much easier, and we can be much more liberal about this because you're backed by regulation and support. But quite interestingly, the token itself has been ascending in value in recent months. There's a lot of discussion about the value of you because you are, showcasing a new narrative whereby there are such things as dividends and we can literally say investment. So to start off with, what does it mean to be able to literally say all these things so openly, and be backed as a security in this context?
I don't know for you, maybe.
Establishes credibility, right? Like, when we talk about investing in our project, right, we actually have clear value that we're giving to the people who are invested in our project. And this is more than just people we raise money from in the sort of public issuance of these securities. It's also the investors who invested in the company, the VCs. It's also our employees who have a stake in these tokens, right? All of these people, we can say with a clear and straight face, like, yes, this is something that we expect to have value for very clear reasons. And so I think it does a very good job of aligning everyone in terms of that value. And it also is sort of just makes it so clear, like the kinds of flimsy arguments that you often hear by other blockchain companies who are doing similar things.
Right. And in that context, Ethan,
Brad,
does it amaze you? Sorry, go ahead, Fabio.
Brad, economics. So you see, I love economics. Right? It's really important here because we made ourselves, me, Ethan, Luciano, Tom, Fabian, and a lot of people on the team, holders of the token. And we align incentive with the community so that the community using the platform, the price, the token can appreciate in value, can give more value. And we can profit more as individuals also. So everybody, the team, the company, and the community is aligned to work to this make a success. If our token couldn't be an investment, if it couldn't be something that I can say I expect to have more value, then the incentive would never be aligned. Because I would have to sell to the community to get money and all these configurations that you see in other projects. We are not doing that. We are keeping
exactly. It almost becomes a pyramid system in that you're alluding to, whereby one has to sell to profit, and while others invest, or invest in what. The question is, are many of these utility tokens in fact that?
So you asked me how do I feel? I will say I don't know how they feel because I have never felt like that.
It's a really good point.
But for us is really being aligned to be the best, to bring the most value to everyone in our ecosystem.
But I think the interesting part is, though, that you have learned obviously from the IPO models. You've learned from the transparency of sound series rounds that are evidenced by real development. Now you're sort of taking that tax in some respects, the way that you're approaching your own startup. But do you see in crypto, or do you concede that many of the companies that exist, you simply can't be trusted because they have an anomalous token model? As opposed to you, whereby you being a security implies direct trust in a system that is designed based on traditional models. Even the people can literally say the word investment and mean it.
Yeah, you can run an economics model. So, for example, there's in traditional finance, there's many models of how you price assets, right? It's called asset pricing. There's one that's called DDM, like a dividend discounted model. You could apply DDM to Nash and try to price it depending on the success of the product, for example. And it's a tool that is directly applicable. So that gives trust. It's not only the legal backing, all the things that we cannot do or can do because of it, but the clarity, the transparency, and like how simple it is to look at the token also gives trust.
Right.
And,
go ahead.
this is not something you can see on the examples you are seeing, because it's how do you actually price it. It's fuzzy.
So the question,
something else I just want to mention here is like we're a little bit unprecedented as well in terms of the share of value that we gave to the community as a company. Like
which
if
is
you
substantial.
look at very substantial, right? Like I remember we had internal discussions about this when we were deciding it, and we went with something that is just a huge amount of value relative to any standard company. So this is again sort of a very interesting approach, which we think is going to pay off, but again creates an invested community that, as Fabio was saying, right, very clearly benefits from.
And have you ever? Well, I wanted to ask you both just on that point that if you've been discussing this internally, did you ever question the generosity of this algorithm, of the system of giving back, as part of that revenue and that dividend structure? Do you think you've got the math right, or are you being too generous in your model?
Yeah, so Brad, there is one thing here that is too generous can be damaging when you don't have enough money for investment.
Right.
So in a startup, what you do for many years is reinvest revenue. So you see, I think even like Netflix for the first 12 years, or even to today, don't give a profit. So our concern, again, in the economics of the token is, are we keeping enough to actually allow the rate of reinvestment that we need for the company?
Mm-hmm.
Okay, so there was quite a lot of thinking, and even the supply. When you think about the supply, if you think of where we can go as a company, the expected circulating supply, how would be the value of the token? That's done in such a way that will land between $50 and $200, for example, if we become a multi-billion-dollar companies. And that's a range of price that's really good for a value exchange. So it's really liquid for trading. So even that kind of things we consider. Mm-hmm. And as Ethan can say, we discussed it from 100% of share to 25% of share, and trying to get to it. If you go today now on Google and type highest dividend yield stocks, you will see that there's no stock that pays more than 15% of dividend yield. Mm-hmm. And we are doing multiples of that. And it was really hard to say, okay, so how are we going to set up this in such a way that will make the company viable?
That's a really good point. So Fabio, the question is, given that you have a model that is so much more financially attractive than the current scenario on Wall Street, why aren't we seeing a lot more, or perhaps we are? I mean, it's interesting to hear from you both, the amount of people that are investing in Nash because of this very reason, that you're unprecedented by design.
I don't know, Brad, and we don't control the market. Our worry is to build the best product that serves the user the best way possible, and let the market price us as they think they should. That's how every successful company has been run, and I think it's a winning model that I don't want to change that. The change that we introduced is rich, so it's a lot more available than those companies. Mm-hmm. But fundamentally, I think letting the market decide is a good decision. I don't know, maybe Ethan can have an opinion about that.
Yeah, and I mean, I don't want to say like bad things, but again, this is a company, it's a startup, it's risk. Like people who invest, they're taking risk, right? Mm-hmm. We are saying like, okay, we can build a non-custodial model that's competitive with the centralized exchange model, and we think there's no reason we can't do that. We see ourselves doing that, but that doesn't mean like 100% that we're correct, right? Of course, all of us think we're correct, right? So there's always reasons why people do or don't do things.
Absolutely, and I think you raise a really good point that it is risky in any scenario.
Yeah, and there's the risk of the market itself, right? So even if we achieve all our goals, if digital assets don't become really relevant, then we will be much smaller than we are thinking we will. So there's risks everywhere.
Sure. Now, gentlemen, I did want to ask you, though, in the context of all the things we've learned since Bitcoin started, you know, the first iteration of this, you know, cryptographic proof. Do you feel that there is a real push now, a real change or bifurcation from the speculative aspects of crypto to what you essentially are proving to be and others could potentially become? What I mean is the things that you're talking about are reminiscent of traditional models where proof is in what you do, not what you write as a white paper, not what you plan, but what you actually do. It seems that that's really what you stand by in trying to, you know, prove the value as you move as a security. Is this a new narrative that you're putting forward that's going to change the game for crypto itself?
No. There's, sorry for hogging the mic, Ethan. But there's, I want to give an example for you here. So it's not only what is currently built, it's as we gain trust and we say we're gonna do things, is on the expectations of that. And one classical example in the stock market is when the Challenger spaceship exploded.
Mm.
A few hours after, the company that built the O-ring at the full tank was being punished by the market. So the stock was going down.
Right.
It took many months. For the investigation to define what was the actual source of the explosion. And it ended up being exactly that. So the market, the common knowledge, all the knowledge spread on the market was looking at all the companies that worked in a spaceship, like hundreds of companies on the supply chain. Which one was the most likely to have had that issue that would make explode like that? And they punish months before the result. So when you see prices and you see prices of Nash, it will be this collective amount of people thinking about Nash, the possibilities of Nash, and deciding which is the price they think Nash
It
will
makes
hit.
complete sense. So once again, there's still speculation inbound in any particular asset, including Nash itself.
It's not speculation. It's what we call efficient market hypothesis. Is people trying to get the real price of your asset, not based only on what is physical now, but on all the capabilities contained on that company.
But respectfully, you know, the majority of people who are participating in something like this, they're not thinking at that depth. Many of them are just thinking, you know, is this a real company? Is it doing real work? And the point I'm getting at is many of the current startups don't have a lot of that proof, Fabio. They just, you know, there is a very strong emphasis on speculation even today in crypto. So I'm really trying to understand, you know, how you're graduating from that narrative into something new and emergent and clear for new types of investors.
I would say we're actually applying a very old and traditional narrative to a space that's just sort of insane, right? So if you look at traditional startups, like the Silicon Valley ecosystem, you know, how young companies raise money, establish valuations, and move forward, we're following more or less exactly that model, right? And while that model might be different from what people often associate with blockchain companies, or especially blockchain companies that sort of establish tokens or do things that are similar to ICOs, it's a very old and sort of, you know, well-tried model. And I think, you know, speaking for myself anyway, I would love to see more companies associated with the blockchain space who have that model, sort of the product-driven, can we create value model, as opposed to, you know, a lot of the sort of hype-driven kind of, here's a technology.
I totally agree with you in 1,000,000%, can I say. I mean, it's great to hear you saying that because, you know, we want to see a cleaner crypto environment.
Yeah, and from my side, I think that's the imperfections of the market. Mm-hmm. And I would say for me, a big signal that the market is becoming less imperfect is the fact that you don't see a lot of random ICOs raising lots of cash anymore. Mm-hmm. So you will not see this year in 2019 the same crazy that you saw in 2017. Like someone would fork Ethereum, say they were gonna do AI chain and raise $100 million. That's not happening anymore. So that's for me a big signal of the increase efficient of the market, but there is still quite a lot of inefficient. I say that we are a very emotional market, even in the sense that Bitcoin price goes down, then projects that have nothing tied to the price of Bitcoin, they will go down.
Right.
Because of the emotion. But that's becoming better. But Brad is really young. This market needs 10 years more, really.
And that's the thing, you're really sending the message clearly through in this interview as well, Fabio, is that we're just at the beginning. Everything is so literally raw and nascent. But I wanted to ask you also on that allusion you made to the emotive aspects, you know, that fundamental emotionality that's injected into the blockchain. We see things like maximalism being raised as a question right now, because often someone's own personal investment, dare I say that word, or their own money in a startup, often that can thwart their own logic, their own rational assessment of something. Do you think that's actually a problem, either of you, with regard to the way that this whole ecosystem is currently playing out, with very emotional responses to anything that's potentially developing from their investment?
I don't think that's a problem just with this market. I think if you look at other markets, you know, like the U.S. equities market, you'll find, you know, similar kinds of people doing similar things. I don't want to like name too many specific examples, but if you think about like Tesla, for example, right there, well, there's a lot of people on both sides of that who have very specific opinions, and that space has a lot of similarity to, you know, some of the stuff which I think you're alluding to in the blockchain space. So I think that's sort of a fundamental property of these markets, especially when you have social media and people with these platforms who can reach, you know, lots of people, manipulate markets through what they're doing. And it's sort of, I think it's sort of a broader problem with markets in general as opposed to this space. But I do agree.
Yeah,
that's a really interesting thing I haven't really thought of, especially when you raise Tesla. So really, it's not something that's specific to crypto. It's just that something quite overt, you know, because it is such a small marketplace.
Right. And so it
becomes a competition of who has more believers. If you have enough believers and your project makes it, you know.
But do you both feel that in the future, proof will determine greater belief? Because that's what seems to be the narrative that's presented with Nash, is that as the steps of proof emerge, yes, there's also that, you know, study that you need to do to assess prospective value. But it seems that you're saying, you know, that Nash will be able to showcase genuine development, much like the traditional model, that many of these other startups simply haven't done.
So, you know, everybody believes in water because it's here, you can use it and you can have it. So it's much easier to believe in a project that's delivering value. Right.
So Nash is the water of blockchain.
I would not say that, but what I'm trying to say is that I don't think the belief in itself is the problem, of the supporters is the problem. And the better you do as a project, the more you're going to have supporters.
Got it.
And the more
do you think...
but you are not talking about 3 months trading. We're talking about a few years of company running.
Got it. So longitudinal is part of the whole, you know, criteria, you know, for this to flourish, for any startup, is to have that patience. And obviously for those who are involved in the system, I would imagine you would advocate for serious education, you know, exploring what really each of these startups fundamentally are doing and planning to do, rather than just simply make a blockchain bet on the crypto casino.
Yeah, it's there's quite a few casinos out there. We are happy to not be one of those.
Got it. I'm sorry to harp about that. Now, with regard to roadmaps and partnerships, to wrap up some of those things, are either of you able to let us know about some planning in the future, you know, that is exciting to you? Whether that be, you know, something technological, whether that be something more of a business partnership?
Yeah, I actually, everybody knows we are working on Bitcoin protocol and so on, but I actually wanted Ethan to talk a little bit of our innovations in non-custodial, because people don't know we are building these things, and I think they may even come really soon. So I do think we have some developments that I would like to talk about what it brings to the users.
Okay.
Yeah. So, I mean, these things Bobby's referring to do, they have really two major purposes, right? The first is, so we've already made a lot of progress on basically trying to abstract away from and getting rid of this idea that the user has to really worry about public-private key cryptography, how they manage their keys, how they keep it safe, and so on. We've already designed a model that's easy to use and is at least making progress there. But we can still go a lot further, both from a security standpoint and also from a usability standpoint. So I don't want to get too much into the weeds, but on the usability side, currently in our system, the user needs to back up a specific piece of information and keep that secure. And while this is something they can do, it's something that we want to design a technological solution for in the future that's much more seamless and sort of completely removes this trust in the user to securely back up this piece of information. So if we can do that, that'll be a huge user experience win, and that's like a strong area of emphasis for us. The second thing. Yeah. And then the second thing is just further enhancing the account security in our system, right? So as you know, we don't take people's keys. People manage their own keys. We have a process through which these keys are derived from multiple levels of authentication that people use to sort of get this encrypted data from the system that we hold. And once they have those keys, however, if you have a malicious script running on your computer, if someone's holding a gun to your head, there's nothing we can do to prevent you from losing your funds, right? So if someone's in your computer already, it grabs your private key, you're sort of done, right? Whether that's because there's a virus or because someone's just at gunpoint forcing you to move your funds. But there is a kind of system that can maintain non-custodial properties, but yet allows us to, at least temporarily, prevent bad things from happening in your account. So if you imagine, let's just take the gunpoint scenario, for example, right? Mm-hmm. So if you have set up stuff in your account such that, okay, I have a withdrawal window limit. I'm only allowed to withdraw $10,000 in whatever units of currency per day. Right. And then someone comes, holds a gun to your head and says, you need to move your millions, to this address. Mm-hmm. There's a way that we can actually prevent that from happening in our system while remaining non-custodial.
Right. So I can hear that you can't tell me too much, but you're doing these key developments to really consolidate the security, to really ensure better security of your network, of your system. When are these things likely?
Sorry, Brad, I love how Ethan tries to explain it.
Without telling me too much.
For the very blockchain people, is like one thing I really want people to start to know is that blockchains do not require a private key. Okay, so what makes you move money on blockchain is signing a transaction, and is a signed transaction that actually proves to the network that you can move money or not. So all these developments that we are done is related to not having private keys also.
Yeah. And that could be a game changer in itself. That's a game changer, Ethan.
It's not fiction. There are papers talking about similar ideas.
So when is this? When is this non-signature approach? When is this non-private key approach going to become clear to all of us?
It's already clear. So this is the thing, Brad. There's quite a few cliches in the industry that are not technical cliches. So people from cryptography will understand what you are trying to say here very clearly. But these cliches in crypto is maddening. So this is still this year, okay, coming. And what we are saying here is really user experience that brings new user experiences that allows the case that Ethan was saying. Mm-hmm. And people should be open to break those cliches. Like people said that you couldn't have a fast DEX. I hope that Friday they will learn that's not true. And we are saying that you can have the same kind of security in no custodial form without actually using private keys, using other kinds of protocols. And we will introduce that quite soon. So.
Got it. So you guys are challenging the status quo, the way in which current even cryptographic modeling is already shown. You're trying to push at the boundaries constantly, and Ethan's alluding to some of these new developments that are coming. Now let's talk about Friday. You mentioned that several times. You talked about how the DEX can be fast. What's coming on Friday exactly? How important is this next move in the more current time?
So what Ethan said, the system for managing keys and creating accounts, that's very simple to use and is fully non-custodial. That's coming. It's what we call funds management.
Mm-hmm.
The interface, I hope we improve a lot. It's beautiful, but I hope we improve a lot. But the functionality is that. Then that communicates with the trading protocol that trades across chains fast, as if you will not be able to notice the difference between being non-custodial or being custodial in a centralized exchange. So that's the main things we want to show. Attached to that, we have other things like staking, we have fiat ramps, all these things that are to show not the technology, but the business we are building.
Mm-hmm.
So I would say what's coming online is a big demonstration of what we call minimum viable product, the MVP,
Mm-hmm.
that has components that show the business we are building and that has components that show the technology that we are building.
Right. So how do you think, given this is a very significant business move as much as technological move, how do you think people are going to react to this, Ethan? I mean, you know a lot about the interface itself, what's coming on Friday. How important is it to really showcase the next move that you're making?
I mean, I think people will be happy. What we need to have is, a stable and performance system. I think even, from day one, people talk about volume expectations, and we'll see what that looks like. I think, within the company, our goal, right, is a very low bar, for around launch, which is to have much, much more volume than any other non-custodial solution that exists today. I think that's a goal we can achieve very quickly, and we'll see how things go from there. In terms of the technology, I think, people, if you understand what's going on, you should be very impressed with what we were able to do. As Fabio says, there's a lot of user experience stuff that can still be refined and iterated on, despite the many tests that we've already done. There's still much to do. And so, I think we would ask people to look at this, as an MVP, as an early stage product. And again, something we're going to do as a team is try to react as quickly and efficiently as possible to the feedback that we get. So we hope that people are very impressed with both the technology and the user experience. But we're also going to move very quickly to address, any feedback that they have.
There's a lot of exciting developments also inherent in some of the things you've been.
Sorry, just because Ethan touched on volume, we believe it will be restricted because there's not a lot of listings. So this is another thing we want to work on. It's on setup of markets. So the first markets that we're really going to focus is Ethereum, USDC, Neo USDC, and Neo Ethereum. Yes, we have a list of more markets starting, but these are really the ones that we are going to work on first. Mm-hmm. And we're going to monitor and do analysis on the other ones to later improve the setup of those markets. But we don't expect huge volumes on day one, mm-hmm. because it's limited. And then it becomes really important, the Bitcoin component, to bring more volume and adding more listings and so on. So this is a growth that we will need to do in the next few months.
Right, and I wanted to ask you about your own token as well with regard to exchanges, which is a slightly different conversation, but no less relevant, because talking about volume, I had a look at the two exchanges that predominantly have the volume of your exchange, of your token, and there's one that in particular that has the primary amount of the volume there. Can you just tell us a bit about why? Which exchange that is, and why there's so much volume being transacted there as opposed to the others?
Which exchange? I don't know which.
Oh, you don't know? It was called, I think, it's over T.
Or Takak, something like
that. Something like that. Yeah, that was it. It has a significant amount of the volume of anything that's traded in your token.
So we have not talked to any exchange about listing our token. Mm-hmm. So they have done that by themselves, for themselves. So it's like we have really no idea why they are doing that. Mm-hmm. We don't know the legal setup, and we just remind people that we are a registered security. We are recognized as a security on Europe and US. very likely across the world because we are a dividend-paying asset. So if they decided to trade that, is their decision. We really have no idea.
Right. So you have nothing to do with those that have just decided to list you.
Yeah, it's good, right? They are providing a service for holders, but it's not much more than we can say.
Got it. Thank you for clarifying that. Now, in the light of regulation and compliance, given that that is happening, do you think that eventually there'll be a crackdown on that kind of conduct and that kind of activity? Because obviously you're trying to be as compliant as possible in every jurisdiction.
Yes.
I mean, I think there started to be that, right, in certain jurisdictions. I don't know the jurisdictions with these exchanges. So, you know, but in the US, for example.
Let's also, this, you know, the cliches thing. Since we are in a 1 hour and a half call, the Tor investors is going to be.
Sorry.
So, yeah, no. But the crackdown is really anyone can enter on the SEC website and give a tip to report wrong security, like unlisted security trading, all these things. It's not something that the SEC from the commissioner needs to decide to do, and they will pursue that thing. It's actually anyone can enter on the MAS, on Singapore, on ESMA, on Europe, or SEC in US and file a complaint.
Well, you heard it from the boss of Nash. If you're out there and you're listening and you're considering that, you know, someone needs to give a call to the SEC about a certain startup, Fabio is letting you know it's possible. Don't be afraid. Let the SEC know if there's something dodgy.
No. This is known. It's not. I'm not communicating anyone. It's really clear. So, and this has been used for many cases. If you buy Financial Times, if you buy the Financial Times and read, every week you have something about it. So when people say, oh, the SEC will come cracking down, I think it's much more plausible that the SEC will investigate complaints they received from wrongdoing.
And I think you raise a very real and genuine point, is that people should know that they can be empowered and heard when it comes to, you know, their own questioning, their own investigations.
No, it's not that what I'm saying. What I'm saying is that it doesn't work top down. It's like the SEC has teams, the ESMA has teams that receives complaints and they work on it. So probably the case of, we already have some cases in US, right, that were being investigated. They were not because the commissioner of the SEC said he would crack down on that ICO. It was because some investor that participated lost money and filed a complaint.
Right, and that's what I'm saying, is that don't, you know, if someone's concerned, don't assume that the SEC is a closed door. That's the point you're saying, is that there is an opportunity for people to reach out to them if you're concerned at all. I mean, quite seriously.
That's how they work. That's how they work.
Yeah, and I think that's a really important point, because not only is it the SEC either. You know, as an Australian, there are a lot of other entities around the world that can be contacted if you are concerned about any particular startup. So I think once again, it reinforces quality in the long term as opposed to crypto crap.
Yeah, so no, if you have been a victim, right, we do know that there were cases of abuse on this industry. So if you have been a victim, yes, please procure the proper people. As if you have a problem on your house and you will go to the police to report, right?
Right.
So if you have been a victim of wrongdoing, then yes, of course.
Right. Well, Fabio, let's talk about, you know, your willingness to really be open about some of these current coins that perhaps shouldn't be securities, that shouldn't be utility tokens, but should be securities. I'll be clear on that. You've been very vocal recently. How far do you want to go in talking about this? Because the reality is some of these so-called coins are not properly classified right now.
You know, Brad, again, I'm always surprised by how people don't read. it's not, I gave, I know what you're talking about. I gave a personal opinion. It's not legal advice. But really what anyone can do is look at the frameworks for digital assets that all those entities we were talking about, they publish it and read it, okay? So it's something like 4 or 5 pages, each one of those. And you will be able to look at your investments and see how they are in light of those and take your own decisions, right? So this is in people crypto called DR, right? Do your own research. It's really just reading that, and you will have even bullet points that you'll be able to classify the tokens that you'll see in CoinMarketCap or CoinGecko and so on, and you will be able to do your own classification with easy.
Absolutely, and I really appreciate your. Sure, I understand. Absolutely, and I appreciate though that you are raising the question and raising the issue, because very few aren't. And gentlemen, to finish off the interview, I just wanted to ask you one final thing, and that is, from your perspective, what sets Nash apart for those who perhaps on the fence, not quite sure whether to jump in to a security system that's innovative, it's progressive, it's an entirely new way of classifying assets in this new digital asset form. What would you say to the people currently listening that really determines the value or asserts the value of Nash?
I would not try to invite them to Nash. I hope that we made a good job demonstrating our values and our vision. So I will invite people to be part of our community if they believe in our values, our vision, and trust us. But if they buy or not our asset, it's really not important. We have a community and we will work the most we can to do the best for them. But that's basically it. If you do not share our values and if you do not share our vision, don't be part of Nash.
It's all about community. It's all about the technology.
It's a chain. We hope we convince you with time.
Absolutely.
Yeah, I mean,
what about you, Ethan?
Yeah, I mean, I would just add to that, basically what makes Nash different fundamentally is the people and the perspectives we have that drive all the work we do at the company. So, I don't know that we, like Fabio, I'm not sure I would ask anyone to sort of, jump in, right? Like I'm not saying people should, buy the security or use the exchange or whatever, but if, if you care about the things we're talking about, right, you care about using a non-custodial system with a good user experience, or, you want to be a user of such a system and help us actually make it work, right? And to sort of build the future that we're thinking about, then come and try it and give us feedback, basically. Because I think, one of the special things about us is that we're so open to that, and we really want to take all the good ideas that we can and act on.
Absolutely. And gentlemen, quite sincerely, I want to thank you for this very long interview. There's been a lot said, a lot learned as well. I think one of the big things coming from you, Ethan, is making the point of that non-custodial development. That is quite significant. It's innovative. It's new to the whole space. Also, the fact that you are arguably the first platform to really be supported globally as a security on the blockchain. Europe's already, well and truly an area that is validated, recognized as supporting what you're doing. In terms of technology, you have a team that's continuing to prove it with regard to real pragmatic efforts towards, future developments. And you've made it very clear that, the entire space still has degrees of risk, but it's all about, reducing the speculation and increasing the value that you're building as you continue forward in technological focus. So I wish you all the very best, gentlemen, as you continue to really build this entire platform for financial distribution, for financial change, because it's all about trying to change narratives, both socially, technologically, and even all the way down to reform of monetary policy. It's exciting to see you're leading that out, and I wish you all the very best as you continue.
Thank you very much, Brad. Thank you for everybody watching also. We will work our best and the hardest that we can to realize these visions. And I can say if we don't get there, it's not lack of effort, neither thought on the things that we do. So thank you everyone for believing us, and thank you for our community to supporting us.
Well said, and I wish you both all the very best.